Hey, good morning, everyone. It's Thursday, 7:30 a.m., June 6th, 2019. Prices of BTC currently at $7,820. Lots of stuff to go through, but first, let me help pay some bills and spread the word of um, me going live and sharing this video. All right. So if you do have some friends, or if you haven't subscribed to our channel, please do so. All right. Let's see. I'm going to spread this over here. This is our Cryptosomniac community. It's a very active community. We have a lot of different channels that you can go through for information, trade setups, what kind of trades that we're in, even just general conversation right here in Trader Talk. So lots of cool stuff going on. All right. And we even have a Twitter page and a Facebook page that we like to keep fairly active in. You can come join our Facebook page as well, right there. And let's see, I'm gonna put this up in our groups, and then we'll get started in just a jiffy. So before we do that, I definitely want to hear your guys' thoughts on what your opinion is, where price is going. Definitely leave me a comment, a question, anything that you would like for me to answer or understand or explain. There's often so many questions that come up, and sometimes you usually get your trolls here and there, but sometimes the trolls are important too, because they help engage with people in arguments where you wouldn't otherwise engage in, I don't know, some critical discussions, right? But for the most part, tend to try to avoid them. Okay, so got my links posted everywhere. I think we should be all set to go. Let me go back to our channel and first explain, this is the Cryptosomniac community, guys. We pretty much reside on Discord. We have a lot of really cool stuff. This is our gains reviews channels. You can see this and see all the people who have found our community valuable and the kind of gains that they've gotten. As you can see, 15% today. This was just yesterday. 2% quick scalp, and then a nice 12% gain. 17%. This is just yesterday, guys. Okay. Another one, 10%. Again, past few days, this member was able to get out of the market based on our analysis and walk away from that drop that happened between 8,500 all the way down to about 7,400. So avoided that. Same with this member right here, 100% cash. ETC trade. Nice little gain right there from 794 to 967, 7% overnight. Anyway, we could talk about this all day because there's literally hundreds of reviews in here. So none of them are paid for by Cryptosomniacs, I promise you, but they are. Each one of these users has a unique story of how they've started trading and how they've become more successful over time by following the systems that we have. It's never that we can provide investment advice, but rather, we can provide you the best. We can provide you the best sort of information that you may find valuable for your own sake to be able to trade and educate yourself. Okay, systems that you can understand. All right. So for now, let's get started with the morning analysis here. All right. First things first, we have the 2-hour chart pulled up. And what we're seeing in this area right here is some resistance right around the 7850-ish level. And what may seem to be happening is something like this, which is a ascending sort of triangle that's being created. Okay, so here's that ascending trend line right there. A bunch of touches at the top, can't break through, and I bet you that the volume is declining as things get closer to the apex. So let's see. Okay, Yeah, so as you can see, volume is declining right there perfectly. Okay, so people always talk about volume should be going up this way. No, that's not true. What really happens is you have a wider volatility in price like this, and then eventually it tightens, and you see volume contracting right here, and then volume expands. Okay, that's the definition of an ascending triangle, where prices tighten due to higher volatility between prices that are not agreed upon at certain levels between the bulls and the bears, and then prices get to a certain level near the apex where bulls and the bears are showing equal strength, but one of them is eventually going to win. Typically, when ascending triangles are having prices come from the down or come from the upside like this, and then they're creating a ascending triangle, this is a continuation pattern. So more than likely it could potentially break to the downside. Okay, ascending triangles are not necessarily bullish or bearish. They're more so continuation, and sometimes have a higher probability of breaking to the upside if price comes from the bottom into the ascending triangle like that. Okay, so just something to keep in mind as a lesson when you see something on crypto Twitter talking about ascending triangles having a higher probability of always breaking to the upside. That's not true. Okay. All right, let's go over here. This is the 4-hour chart on BTC. Still, I want to show you guys that we were in this huge bull pennant right here. Okay, this bull pennant started from way back here, end of April, around $5,100 bottom to this $8,300 top, right? We went a little bit higher, broke out of the pennant, and then sort of came down again. Okay, and when we came down, I mentioned that there was this trend line right here, touch 1 right there, touch 2, touch 3, and then multiple touches as resistance right there. See, touch 1 and 2, and then it got rejected. So it's important to understand to draw these trend lines, because you could have easily, if you did not catch this top of selling here, you didn't even need to sell down here. But what you could have done is watch for this trend line to break, watch prices come up and see if this is going to be tested as resistance. If it is, that's your first area to get out, your second area to get out. So you could have gotten out at 8,500 or even 8,700 and avoided this drop from 8,500 all the way down to 7,400. Okay, so this is why it's important to learn technicals, guys, and this is something that we teach heavily in our community. Education channel right here is filled with it. Okay, I do private videos for our community right there, like Elliott Waves. I have an entire course for our community specifically to understand technicals right there. You can check it out on cryptosomniac.com, and products right there, and technical analysis course. It's only $10 and it has about 8 hours of work. So a lot of information packed in there. All right, so going back to the Coinbase chart here. So for now, it looks like what we're really doing is we're just grinding back up. Okay, so this was the low put in. This is another little higher low. And now what we need to see is a higher high as per this swing right here. Okay, at least on the 4-hour chart, we need to get past that swing. And you can see we've had clear rejections, as per this wick right here, even when we tap into this supply block right there. Okay, the way we create a supply block is being able to understand when prices hit a particular buy area from some buyers, and that did not matter, okay, that these buyers bought up everything in this area, because that's why you have green candles, right? Because there are more buyers than sellers in these particular candles right here. But eventually the sellers took over and then just tanked the price. Okay, so what that means is then these buyers formed something called an order block. Okay, so when this order block was created, right, these people are trapped in this area. Okay, meaning that their positions are now underwater. Okay, so what that implies is if prices reach up to levels like this one right here or this one right here, people are going to want to break even on their positions or have their sell orders placed right in this block right here. Why? Because they want to just get, they want to just break even, right? Most traders, human psychology will tell you you'd want to go break even if you're suffering, a decent amount of loss, because you don't know if prices are going to come up higher or they're going to come down even more. So you might as well just sell whenever you get an opportunity, when price comes back to your break-even point. Okay, you have to be able to understand, not just technicals, but how human psychology works too. All right. Okay, so with that being said, let's go back to understanding what's happening on larger time frames. Okay, so here's the Elliott Wave count. All right, now I had stated that, let me turn on the volume and show you guys something. Okay, so in the third wave, okay, of Elliott Wave counts, there's usually the most amount of volume. All right, at least that's how the E-wave count, impulsive counts work in equities. Okay, when it comes to cryptocurrency, because BTC acts like a commodity, the fifth wave can actually be the strongest, and it can also contain a decent amount of volume. But I would say that this third wave right here has already contained a lot of volume, right? So if this 9,000 was the top of the third wave, the fourth wave is supposed to be somewhat symmetrical in terms of time and space given for price to retreat, retrace, and then start that fifth wave. Unless we've already had the third wave, say right there, the fourth wave, say right there, and then this is the fifth. Okay. Personally, I don't think that the third wave ended just right there, because there's very little volume in here to sort of call this a third wave. So this is why I state that this is a third wave. The fourth wave could be coming up right here, and then the fifth wave is somewhere over here. Okay, and you can see that second wave took anywhere between 40 to 46 days from this wave 1 top to wave 2 bottom. So I would say if the fourth wave is going to take about the same amount of time, say 46 days, and we started this maybe last week, this could take us somewhere into July for prices anywhere between, I don't know, current prices right now, which is 76, 7,700, all the way down to low 6,000s or mid 5,000s. Okay, so you have to be able to understand Elliott Wave counts in understanding the symmetry of price or time and space as well. All right. Okay, I hope that was clear. Now there's a couple more things I want to show you guys. Aside from what we were looking at earlier with Elliott Wave counts, it's also important to understand that this bull flag right here could still be at play if it were to create a larger bull flag, right? Where price may be meeting it like this, and this thing, I don't know, this line comes out to something like this. Okay. Oops, I don't know why that's happening. Something like this. All right. So this could be your bull flag or your rising expanding wedge too. Okay, remember these rising expanding wedges are also bearish. All right, because what happens is price hits larger and larger volatility like this, and eventually it sort of pulls back to the downside. But regardless, it's important to keep in mind patterns like this, because you never know what is at play on what time frame, and which time frame is going to trump the other. If you think that the 4 hour is looking bullish but the daily is looking bearish, the daily definitely trumps the 4 hour. Okay, so just something to keep in mind, that this rising expanding wedge, maybe this larger bull flag, might be at play too. Okay, so this is really a bigger range that BTC could come out to and push towards, say 9.5, 9.7 over the next couple of weeks, if it does happen. Okay, or not next couple of weeks, technically the next few days, if this broadening wedge is going to play out. All right. Another daily chart that we need to look at is, we do have this Wyckoff distribution. We'll look at this in a second. First, let's look at this one over here. All right. So first things first. So this is the 4-hour chart, and I told you guys that this big trading range that was going on before prices moved from the break of 8,300 resistance went all the way to 9,000. But look, it came back down into that same trading range, and it's bouncing off perfectly at this $7,600 marker. Okay, if this EQ breaks right here, the equilibrium of this entire level, the next trading range bottom is around $6,900 or so. Okay, this is as per this big sort of 4-hour chart. You could very well make a quick pit stop at around 7,200, but the biggest real support is probably 68, 6,900 in this area right here, as you can see. Okay, and then there was this big long wick, which was a larger liquidity hunt. This is also pretty strong support because all of this was quickly bought up, as you can see, and that goes from 6,900 all the way down to 6,100. So prices, are a bit uncertain, anywhere between lower than 7,600 all the way down to 6,100, because there's just this massive block of misunderstanding between the bulls and the bears of where prices may stop at a critical juncture and where they might just break on through like thin ice. Okay, so all of these levels are important to watch. I highly suggest that you guys map out levels like this and do this for yourself. Okay, don't just wait on people like me to sort of show you these kinds of charts. I bet you can learn this on your own, or just come join our community, and I promise you I can help teach this to you. Okay, let's see. I wanted to check out some questions that we have. Which one is better, STO or IEO? For now, it seems like Lambo Geek IEOs are clearly kicking ass, doing a fantastic job. But I'll get to those at the end of this analysis, guys. So first, let me finish up on the rest of what I have to say, and then we can discuss for a few minutes what else is left. Okay. Now on this chart right here. Okay, here's something. Let's see. Oh, there it is. There it is. All right, I have so many charts. It's really hard to keep track of, so I'm trying to get organized and write things down. Definitely need to do a better job. But so one thing that I pointed out is, we had this other than this wave count right here, right? If we are having a quick fourth wave finish right at this bottom, and then we're in the middle of the fifth wave, obviously it makes sense that we might just be grinding up and down as this fifth wave starts, right? Critical levels to look out for, again, like I said, 7,600 is the next support. 7,200 is as per if you start looking at where these candles bottomed out right there, okay, that would be the next big support as per the daily candle. But like I showed you guys earlier, in this larger trading range that we had on the 4-hour, it's more visible for us to see resistance right there, support right there, and support right there for the $7,600 range. And then the 7,200 is right there, or I'm sorry, 6,900 is right there, support and support. Okay, so at least two areas where support was tapped at around $6,900 or so. Okay, so sometimes the hourly and the dailies may be conflicted in prices, but typically you want to look out for the daily, and you want to be able to look out for specific order blocks, like I told you guys earlier, where price may have caught the bottom or the top and then reversed very sharply. Okay, in this case, I would say 7,200 is definitely a decent size area where price reversed sharply from this bottom to this top. Okay. Let's see. Now, pulling this chart back a little bit, I wanted to show you guys. I had this, projection mocked up for the coming 2020 BTC prices. But before that, I wanted to show you guys that this line right here, which is the 8,050, 8,100 marker, is where the weekly and the monthly pivot currently reside. Okay, and you can see how perfectly that maps out with this $8,200 resistance that we had in July 2018. And you're seeing right now that we are breaking under it. Though this weekly candle right here has about 3 days left in it, if this weekly cannot close above this pivot, we may actually have more bearish downside. And the next level to watch is also this area right here, $7,300, where these candles closed previously in September. Okay, which again maps out with the levels that we spoke about, right, on the daily chart, which is around $7,200 or $7,300. Okay, and then below that is the $6,900 area that I showed you guys right here. Okay, so there's a lot of different levels to watch, but as you keep in mind each one, you'll get a better understanding of the overall picture. Okay, and it really helps to have a better understanding of the overall picture. Okay. All right, final chart that I mocked up is this big sort of pitchfork, and I don't often use pitchforks because they're very complicated and trying to understand which fib levels map out to which. But I drew this one because it fit pretty well, pretty perfectly actually. The outer lines right here are the 1.5 fib extensions. The 1.0 is the white right there. The pink right there is the 0.75. The purple is the 618. The light blue is the 50 fib. The gold is the 0.25. The green right there is the 0.382, and then the black right there going all the way through is the median. Okay, so what this pitchfork tells us is when price hit a bottom and it hit this top range and this bottom retrace, okay, what is the range of price action that BTC is projecting on the way up like this? Okay, because for the most part price moves in channels, right? Pitchforks help us create a channel based on fib levels from prices creating a bottom and then a wide range. Okay, so as you can see currently right now, BTC is right perfectly bouncing off this light blue line, which is the 50 fib of this large pitchfork, and it's now struggling to get through the 0.25 fib area. Okay, and you can see that that 0.25 fib lines up with this touch right there and this touch, so it only makes sense that this is going to become resistance right there. So if this becomes resistance, we may go back down to that purple again, dragging prices down a little bit lower, and if that breaks, it might go a little bit further down, which could be the next one, which is the purple, which is the 50 fib right there. So that could take prices down to $7,500, $7,400 area. Again, prices could still move up in channels like this, like that, but each one of these fib levels will give you an idea of where price could touch and bounce off of, depending on which day you're looking. All right, and I hope that helps. I know these are a little bit complicated, but if you want to understand, there's some education articles in our community that will help explain that. All right, last but not least, this Wyckoff distribution schematic, I drew this up on May 26th. You can see that it has fairly well come true. Unfortunately, the last two levels that we're looking for is the last point of supply right there, which is around this area right here, 81, 8200. So that should be seen as resistance over the coming days if this is supposed to play out as a whole. And then the next point, once it hits 8200, it needs to drop to this bottom range right here, which is the previous sign of weakness. That's around $6,900. Then it needs to bounce up again to that $7,400, $7,500 area, which was previously support, and that needs to be turned into resistance, and then that's your last point of supply right there, and boom, you just kind of break down in a sharp fashion towards the lower 6,000 bound region. Okay, this entire explanation is put up right here on the trading view. You can go check it out on your own. and give us a thumbs up, whether you're watching on YouTube or you see our work on TradingView. All right, guys, it really helps with our view count. It helps, paying some bills for our channels. Okay, pay it forward. All right, another thing to talk about is the COT contracts, which is the commitment of traders contracts for the CME Bitcoin futures. So Chicago Mercantile Exchange has been trading Bitcoin futures since December 2017, and obviously we know what happened December 2017 as soon as these futures opened. I'm not saying that the futures themselves had a direct impact on the price going down, but I think the price going up had already factored in 2017 that these futures were going to be open, and it was just very easy to dump the price and open short contracts on BTC going down. Okay, I have a huge sort of tinfoil hat theory on that on my YouTube, so you can go check it out. And I don't even know if it's tinfoil hat because it's played out so perfectly well that it's really hard to question that CME futures are the ones essentially helping push this market around, because they're like a 800-pound gorilla. So anyway, when we're looking at the last week's close of the CME contracts, remember that May 31st was the last day for the expiry of the May contracts, and now June has now opened up. There was still a more higher interest in shorting for BTC versus longing, but there's still a decent amount of long contracts over here, far more so than we had in 2018. And there's actually more open interest, as you can see, in long contracts. So this means that these contracts could have definitely been rolled over for the June CME futures, okay, for all we know. So remember that prices could tick up sharply in the middle of June when price finds a quick bottom. But I don't know exactly if this open interest has actually translated to June's contracts being long. It just means that this open interest was showing that they're potentially going to go long, but for the most part, at any point they could have just turned short. Okay, so you can look at this on your own time, and it's a very useful website, really important resource to be able to understand what's happening in the futures markets and how that has impact on price. All right, last thing I want to talk about is someone with the Twitter handle TradeBlock explained how each SEC complaint or enforcement, how that has impacted price on BTC. So you can check this out on our Twitter channel, Cryptosomniac, okay, right there. And it's very fascinating because you get to understand, where exactly each one of these events took place and how that impacted price, okay? Now that we've started sort of this run right here, you can see that price is barely being impacted by, whether SEC is filing a lawsuit or they issue, a no action letter that clears ICOs to sell tokens, or, when the SEC's sort of or New York Attorney General is now filing a suit against Bitfinex. All these things, how they impact price, it's also important to understand too. All right. Last but not least, let's check out some of the trades that we entered in our community. Let's check out Fetch. Okay, see how Fetch is doing. All right. So here is Fetch right here. All right. I think I had put this up yesterday, but let's see. Oh, no, I had put up Seller. Let's look at Seller first, and then we can look at Fetch, okay? So here's Seller, right? Our community right here, you can see we entered at about 247 or so, okay? And the red is my stop right there, 225. And you can see that we're already up from this bottom right here, okay, to this area right here. So we're up about 6% on our trade already, halfway there to our next target at about 278, Okay, this big block, if you do buy in, again, none of this is investment advice. I hope you guys, understand that this is all for educational purposes. I put up these trade setups for myself, and I just show in the community what I'm doing. As you can say, it says I will be entering. Okay, and so you can see that I've entered already back here at 247 or so, and I'm taking this trade up to anywhere between 278 and 298 because this is the next big sort of order block of resistance. And I'll make anywhere between 12% and 19%. And if you follow this trade, you may too. Okay, but not investment advice. Keep that in mind. Other than that, we had another trade yesterday that took up a nice couple of and gave us a nice healthy percent. We got in around I think 300 or 310 on average, as you can see as per this chart, and it took us, let's see how high it took us. One went all the way from this $300 Satoshi area all the way to 393. Okay, so broke up very perfectly, and now that it's essentially used this area, so we had this cup, this handle broke up, retested this area of support. Now I think it may actually have more room to the upside. Okay, especially given the fact that it's now testing the same area that was resistance as support. You might want to trade this on your own, but if you do get in, from current prices from here, your next sell might be this 425 Satoshi area. Okay, and your stop will probably have to be lower than these wicks right here. Okay, so somewhere around 343. All right, so this seems like a decent, 1.5R trade, meaning you're risking about 50% for 100% gain. Okay. I'd say that's it. I'll take a look at Fetch real quick. Fetch is also looking decent, guys. Beautiful, resistance test right there a couple times. I would say you want to wait above this block because if you buy in now, you're essentially buying resistance. But if you wait above this block around 2,900 or so to be cleared, you can take this next trade all the way up towards 3,900. So from 2,900 all the way to 3,900 or so is your potential target. All right. Again, just my analysis, not investment advice, but this is how I would trade this. All right, so this would be a nice 35% gain if you do get into it. So all the IEOs are clearly looking good. So whoever was answering or asking that question earlier, IEOs are clearly far more successful right now in today's market than STOs are, because STOs have a different regulation, especially in the United States, where people have to be a little bit more careful because they are security token offerings, and securities are seen with far more stricter regulation with the SEC here in the United States than IEOs are, which are not even understood. Okay. All right, folks, I think that wraps it up. I hope you guys enjoyed this analysis. Thank you so much for watching. Please give us a thumbs up. It takes a lot of energy to do these videos every single day. I hope you enjoy. And that's all I have. Take care. CryptoSomniac.com. Come join the Advantage, guys. If you have any questions, come join Discord and ask us questions in the free lounge, which is this community discussion. Or if you join Advantage, come talk in Trader Talk. All right. That's it. Take care. Cheers and have a wonderful